Bitcoin just touched its lowest level since September of 2024. And the more interesting story this week isn't the price, it's what cracked on the way down. This was the week the leverage everyone's been copying got tested in public. Strategy, Michael Saylor's company, the one that turned a public stock into a Bitcoin holding tank, saw its shares fall below $100 for the first time in 2 years. Its Bitcoin stack is sitting on a paper loss north of $13 billion. And the preferred shares it's been leaning on to raise fresh cash slipped below their par value right as a monthly dividend reset lands at the end of the month. None of that is a margin call. But all of it is the market finally asking a question it hadn't asked in a while. What happens to the copycats if the original starts to strain? That's the thread running under this whole week. Let's walk it. Bitcoin spent the week grinding lower, broke down to roughly $58,000, the weakest it's been in well over a year, then clawed back towards $60,000 by Friday. Ether was weaker still, sliding further as another $1 billion in futures positions got wiped out in a single stretch. Heading into the half-year mark, crypto is closing the first 6 months of the year in the red. Bitcoin's one consolation? It fell less than Strategy's stock did. Here's what's worth being precise about. This didn't break on a headline. There was no Fed shock this week, no geopolitical rupture. What you're watching is the slower kind of damage, positions unwinding, leverage getting flushed, derivatives still pointing to more pain before it's done. That's a deleveraging, not a panic. It's the market wringing out borrowed money, and it tends to look ugly while it's happening and healthy once it's over. And underneath the red, there were green shoots, selective ones. The clearest came late in the week from DeFi. Aave led a sharp bounce after its founder floated token buybacks under a new fee framework, the protocol pointing its own revenue back at its token. Solana caught a bid too, with tokenized stock trading driving fresh volume through its ecosystem. The DeFi corner of the market, exchanges, perps, lending, outran everything else over the week. But read that carefully. A bounce off the lowest prices in more than a year is exactly what you'd expect even in a downtrend. Respect it. Don't trust it yet. The week's other real story was structural, and it was Ethereum's. The Ethereum Foundation cut 54 staff and reorganized itself into 5 operating clusters, and a former member warned the network now has to build new funding institutions, fast, as the foundation deliberately steps back. This is the unglamorous work of a network growing up. Less central steward, more distributed funding. Necessary maybe. Comfortable, no. Now hold all that gloom against this. In the same 5 days, the tape was bleeding, the suits kept building. Securitize, the BlackRock-backed tokenization firm, is days away from a public listing on the New York Stock Exchange. Franklin Templeton formalized a dedicated crypto division. And in Japan, financial giant SBI agreed to buy the crypto exchange BitBank for nearly $300 million. That's the quiet pattern under this entire drawdown. Prices fall, leverage cracks, and the institutions treat it as a reason to keep laying rails. One place the rails got pulled, though, Europe. Binance told users across the European Union it would suspend some services after failing to land a license under the bloc's new crypto rulebook, having just withdrawn its application in Greece. The largest exchange in the world, stepping back from an entire regulated market. A reminder that regulatory clarity cuts both ways. It lets some players in and locks others out. So where does that leave us going into the back half of the year? Watch Strategy's month-end dividend reset. It's the cleanest live test of whether the leverage model bends or breaks. Watch whether the DeFi bounce holds a second week or fades like the last 2 relief rallies did. And watch the institutions, because if the builders are this busy while the traders are this scared, one of them is early and the other is wrong. The leverage that got everyone here is the same leverage getting tested now. That's not the end of the story. That's the part where we find out who was swimming naked. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.